You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's going on in the futures options markets? Well, let's find out together. Yes, it is time for TWIFO, This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever insightful Options Insider Radio Network, coming off the biggest month, November, the biggest month in the 15-plus year history of the network. So glad to see a lot of that driven by TWIFO, actually. A lot of folks filing into TWIFO over the last month. So glad to see a lot of you folks are enjoying the content. If you like what you hear, do keep rating and reviewing. Again, we've been doing this for a long time. We have a lot of reviews, but clearly the new ones are helping new folks continue to discover the content. Again, in particular, TWIFO. So keep that up. And of course, if you like what you hear and you want more in your lives, and who doesn't, then head on over to theoptionsinsider.com/pro. That's the place to go to get access to exclusive content. Great pro Q&As. We have the once future and now present Dr. Bix, Mr. Russell Rhodes, answering all your questions about all things volatility. Yesterday in the hot seat, of course, we have options oddities at the end of every week, breaking down the week's worth of unusual activity. Great giveaways. Just gave away our pro trading crate to the November winner. So congratulations to him out there and to everyone out there who had their name in the hat over the course of the past month. Ravi Brewster was his name. Congratulations, Ravi. And then, of course, if you want access to this live and everything else we do, our pro podcast feed, all that good stuff, theoptionsinsider.com/pro is the place to go to learn more. Let's see who's joining us today in the CME Group and FTSE Russell hot seat. I am very pleased to welcome back on this next guest. It doesn't seem like it's been this long since I've talked to this person, but it has been quite a while. It's our old friend, Mr. Blue Putnam, the chief economist and managing director over there at CME Group. Blue, welcome back to TWIFO, sir. It has been far, far too long.
It has been too long, but you know what? It just seems like yesterday.
It seems that way to me, too. They told me I haven't talked to you since March 12th of 2019. We did a live show back at Boca. Does that seem possible to you? It doesn't seem possible to me, Blue. I'm sure we've talked once in between then.
I'm sure we talked. But anyway, I know we talked at Boca.
Yes, I know we talked back then. So, hey, you know, what's been going on with you since 2019? Not much has happened in the world, Blue. How you doing?
No, nothing's happened. You know, the pandemic's subsiding and interest rates are up and we got inflation, but really, you know, it's same old, same old.
It's been a quiet period, you know, not much for us to talk about here on the network either. So I don't know.
Nothing to talk.
I guess we'll scrape something together to make a show, Blue, as we keep on rolling right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the upside, aka the light side, and to the dark side over there at CME Group this week. You can find this reports if you follow CME on Twitter. Of course, you follow us on Twitter. We tweet it out as well. This is one of the few exclusive pro reports you guys can get your hands on. Of course, if you want to see more about all that goodness, head on over to bantix.com, BANTIX.com. They're the folks who create all these cool TWIFO reports and everything else we talk about here on the show. We really just scratch the surface here. If you want to see more, see what you can sink your teeth into, bantix.com, BANTIX.com, the place to go. All right, Blue, I know it's been a while since you've been on the show, but I think you know what's coming next, sir. Where should we begin our journey this week? To the light side or to the dark side, sir?
Oh, let's go to the dark side. But, you know, any trade is a good trade.
Well, you made the right choice this week, Blue, because we're looking a little dark side biased. Roughly, I'd say 2/3 to the red and 1/3 in the green this week. And speaking of bias, we certainly do have two complexes really kind of dominating the tape this week. To the dark side, we have number 5, WTI. You know it's a banger week for the dark side listeners when WTI is off 11.48% and it's only number 5. It was number 1 in the other direction last week, up 8.59%. So that shows you how much action we've seen in WTI just over the last couple of weeks. Number 4, still staying in energy. It's RBOB off 11.89%. It was number 4 in the other direction last week, up 5.54%. So the energy complex giveth and the energy complex takes away. And this week it is taking things away. Number 3, a quick departure from energy to go out to ags. Oats getting the hammer this week off 12.81%. Again, you know the deal with oats, not a huge option story to be had out there. Number 2, back to the energy complex. It is heating oil off 14.59%. It was number 3 to the upside last week, up 6.71%. And our number 1, man, they have just come for this one this week. Number 1, mover and shaker to the dark side this week, nat gas off 21.68%. My goodness. It was number 2 to the dark side last week, off 3.75%. And then to the light side we go, listeners. Number 5 of the light side here. We have one of our few, looks like, the only foray to metals this week. Number 5, it's silver, up 1.94%. So the last few months, been an interesting period for silver, making it back on the charts this week. Number 4, back to the ags, soybeans, up 3.16%. So far, it's been all energy and ags, listeners. Number 3, a quick foray to the rates, the Ultra 30-year, up 3.8%. Number 2, back to the ags, at least for the softs, it's lumber, up 4.38%. And number 1, staying in the ags yet again. We talked about this last week on the show. It is back again. It is soybean meal, up 8.3%. So, man, the entire story this week is pretty much ags and energy. And Blue, I know you've been doing a lot of research out there in the energy side of the space. I think we'll start there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everyone. Welcome to the ever volatile world of energy these days. Head on over to cmegroup.com/TWIFO, TWIFO. That's where you get access to our free TWIFO reports. And from there, scroll down 3 slots. You'll see energy. A lot of different places we can start there. We can start WTI. We can start nat gas. But let's start with blue first. Blue, I know you've been looking at a lot of energy. Obviously, there's a lot to look at out there these days. In particular, how Chinese demand and how the Chinese economy can influence what's going on out there in the energy market. So what have you been seeing out there, Blue?
Well, I think, China is the largest importer of many commodities, but oil is a big one for China. And, the Chinese economy has had a really rough year with the COVID-0 policy and shutdowns and the hangover from their property debt crisis. But, they're changing their policies, and it's not going to be easy. It's not going to be smooth. But if China makes a comeback, then we could see more demand for commodities. But that's really for next year. I think so far what we're processing with China is that the economic reality on the ground is probably a lot worse than the data shows. And we have to realize that, China's buying Russian oil. It doesn't need as much Middle Eastern or U.S. oil. And it doesn't need as much oil in general because the economy's pretty slow. But coming out of the lockdowns, it's going to pick up.
All right, we shall see a lot of fluid activity over there on the ground in China right now, Blue.
Yeah, that's right.
Let's check out what's going on out here. Let's see how fluid things are in WTI this week, our number 5 mover to the dark side, listeners. And WTI putting up some numbers this week. If you're listening to the show for a while, somewhere around the 450,000 contracts range is a pretty normal week for WTI. This week, 606,000 contracts already on the tape. So WTI seriously putting up some numbers. And of that, looks like 33.8% is trading like an equity, listeners, going up in the contract that has a whopping 7 days to go. That is the Jan contract out here. Let's go a little bit farther out and see as well, because, again, a lot of paper flying fast and furious this week, listeners. Also have about 20% going up in the February contract. That has a little bit more time to go, so we can also hang our hat out there. Really quickly, where is WTI right now? 71.85 as we're kicking off the show, off a little over 8 handles, about 8.1 handles, or about 10.2% just since Monday's session. Of course, obviously, if you go back to the end of last week's show, it's off 11.5%. So a rough week for the Texas T. Doesn't seem like that long ago we were talking about the par strike and the 110 strike. Now here we are back in the 70 range. And that probably explains what we're seeing out here in terms of paper. I did a quick scan, listeners. I don't see a ton of those weird upside 1-point verticals. So hopefully there's not a lot of that distorting the numbers this week, but we'll dig into it a little bit. Really quickly, that Jan contract that has about 7 days to go. The vol out there is about a 55. The puts last week, 2.8% bid. This week, 4.8% bid. And the calls, 2% cheap last week. This week, 3.1% cheap. If we go out to the contract that has a little bit more time to go, about 40 days to go, this Feb contract, that one, the vol is about a 49 out there. Both of them, the vol is up about a little over 6 points in the Jan contract, about 2.25 points in the Feb contract. And skew-wise, in February, the puts 4.3% bid last week, 5% bid this week, so getting a little bit firmer out there. And the calls, 3.5% cheap last week, 4.4% cheap this week, so a little bit cheaper on the call, so looking like a little mild equity skew out there in February. And in terms of action, listeners, thankfully it wasn't just a weird 119, 120 call spread that was dominating the tape this week. It's something a little bit more interesting, a little bit more, dare I say it, relevant to a lot of you out there. It's the 70 puts going out in 7 days, doing 19,000 contracts this week. The big day was Tuesday, 7,100 contracts, 5,500 today, 3,000 on Wednesday, and 3,300 on Monday. Opening earlier in the week, looks like closing in the latter portions of the week. So pretty much at the money puts. It's been a while since we've seen paper that close to the fire actually lighting up the tape out here in WTI. So that is interesting. Seems like the 70 puts are all the rage this week, listeners. We also saw about 10,400 of them going up out there in the February contract as well. So intriguing stuff out there for the 70 puts. We also saw this week, going back to January. The 75 puts also lighting it up to the tune of 10,500 contracts. The big day Monday, 4,500 on Monday, 4,100 on Tuesday, 1,000 on Wednesday, and close to 1,000 today. Looks like closing all week long. So maybe some folks, as we blew through the 75 strike, taking their profits. Maybe they were short the strike and they were getting the heck out of Dodge. Either way, a lot of closing activity here on the 75 puts this week. And then, interestingly enough, we have to go a little bit farther out for the number 3 one. You're thinking the 70 puts in January? Maybe it's a little bit too close to at the money and a little bit too close to expiration for your blood. Allow me to present the 40 puts in Dece of 2024. They traded 10,850 contracts out here this week. It looks like 2,200 on Tuesday, 4,300 on Wednesday, and 4,300 again today. It looks like there might have been a 40, 45, 55 put funky three-way out here because the paper doesn't really line up with any sort of fly or anything like that. But a funky strip, if you will, with a bit of a ratio with obviously more, about 11,000 of the 40 puts trading versus about 7,000 of the 45 puts and 4,200 of the 45 puts. All in Dece 2024, all trading this week, all opening paper. So new opening positioning out there in 2024. So there you go, listeners. What do you think? You like that? 40 puts, 40 strike out there by Dece of 2024, or maybe a 50, 45, 40 put strip going up out there. You like that in Dece of 2024? Hit us up. Let us know. Looks like there were some of those weird upside verticals, listeners, but not a ton out here. Let's see really quick. Looks like it was just the 110 calls trading about 11,000 times this week. These were in April of next year, and I don't see the corresponding one strike wide vertical. So maybe they've given up on that paper for now. That'd be nice, but hey, we shall see. A lot of that is still open, so I have a feeling they're going to come back to maybe take some of that off or roll it, dare I say it, one of these days. Intriguing stuff. Blue, before we roll out of energy, the other product that's been lighting up the tape and is our number one offender to the dark side this week, Blue, is nat gas. You know, I've joked on the show for a while, Blue, that you can guess pretty much 3 products every week, and you have a decent shot of at least one of them being in our movers and shakers every week. They're usually Bitcoin, lumber, and nat gas. And this week, we have 2 of the 3 in our movers and shakers. But Blue, I know you've been looking a lot at the energy space when it comes to WTI, but nat gas has been moving quite a bit, obviously, ever since the February invasion. Anything catching your eye in the world of nat gas these days, sir?
Well, you know, nat gas and WTI, but they dance to different drummers. Nat gas is really responding to the weather, whereas oil is responding to China. And nat gas, we're having so far a relatively benign winter in the United States. That, by the way, may not last. One of the things that climate change brings to us is a significantly less stable jet stream, and you can get these super cold effects when you get some instability way up there in the upper atmosphere. But at least for now, nat gas has receded. It's a slightly backward curve. The spot prices and the nearby futures are a little higher than the way out futures. But I want to contrast that with oil. The oil curve has gotten really flat. I mean, you were talking about the Dece 24s and things like that. They're only a couple of things in the futures. They're only about $3 off the nearby contract. And, if you go back 6 months, there was like a $25 difference between those things. So we flattened the oil curve, and we're just barely slightly backward in the nat gas. And to me, that's a signal that we're really trying to come together on where the long-term prices might find their equilibrium. And so we're close to it, I think, in both markets. But, nat gas is weather volatility, so it's going to be on your darker light side almost every week.
Seems like it is these days, Blue. It doesn't seem like that long ago, Blue, we were talking about the par and the 110 strikes out there in WTI and the corresponding 10 and even 11 and 12 and beyond handles in nat gas. And now here we are, 70 handle in WTI and a 6 handle again in nat gas. So how the mighty have fallen, Blue, over the course of the year.
Yeah, they have. And, one thing that nat gas, what's going on in Europe matters to the U.S. Henry Hub nat gas. And Europe has been able to restock their natural gas storage facilities much faster than anybody thought possible, Of course, the U.S. helped a lot. We exported as much LNG as we could, and that kept U.S. natural gas prices up for a while. But, now that's as European prices have come down and the urgency to restock is not quite as large. We've seen a little bit of sell off on the nat gas side. But I got to tell you, the official start of winter hasn't even happened yet, and we're going to get some serious cold spells. So hang on for some nat gas volatility.
Uh-oh, you putting your weatherman hat on me, Blue?
I am definitely putting that weatherman hat on. I mean, we just don't, one of the things climate change brings is a little more instability, and we can get some extreme cold weather, maybe just for a week or two in the northern plains and things like that. And next one, that's what we're about to see in Europe. Actually, is a pretty cold week. So you got to be a little bit of a weatherman if you want to manage the natural gas risk.
All right, let's get out there, see what kind of risk we have on the table this week in nat gas. Nat gas hanging out just barely north of the 6-handle, listeners, 6.008 to be precise. So just barely north of that 6-handle and that front contract out there. How much paper going up in nat gas? Again, it's a pretty active week across the board this week. 466,000 contracts going up in nat gas this week. That's a pretty active week, all things considered. And once again, we're hanging out in pretty much all front month all the time. It's quite an equity style palooza in energy this week. Again, that reflects how much things are whipping around. When things are moving around like this, you want a little bit of gamma in your back pocket, hence all this near dated paper we're seeing. 37.6% of that 466,000 contracts going up. And the Jan contract has about 19 days to go here in nat gas. Let's see, the vol out there, it's been over triple digits for a while. Just ever so briefly dipping below it right now this week, off about off about 2/3 of a point, trading right around 98 1/3 right now. So just barely below triple digits. Of course, you go out to February, the vol is about a 112. You go out to March, it's about a 103. It's not really till you get till April and beyond that we dip back down to a more, shall we say, tranquil 80 and below from a vol perspective. In terms of skew in that front contract, the puts last week, 4.8% cheap. This week, 5.3% cheap. And the calls, 7.7% bid. Last week, they remain juicy this week, pretty much 8% bid over the at the money. For a lot of our new listeners, out there listeners, that is, of course, the measure of the volatility premium of the 25 delta puts and the 25 delta calls versus the at the money. So in this case, we're seeing about an 8% premium above that at the money, roughly 98 1/3 level that we're seeing out there for the calls. In terms of action, speaking of calls, was all calls all the time out here this week. In particular, was the 7 even calls, lighting up the tape to the tune of nearly 19,000 contracts this week, taking the number one spot in nat gas, listeners. So the big day for this was actually Monday. We saw 8,000 going up on Monday, pretty much slightly biased towards opening. Almost 5,000 on Tuesday, 3,200 on Wednesday, about 2,500 today. So decreasing volume all week long, but a big spurt going up on Monday. And again, looks like opening throughout the week. So a whole bunch of new OI going up on this 7 strike. Are folks thinking we might be poised to pop? The calls are still bid, but the skew hasn't really moved a ton out there this week. And then right behind it, we have the 4 puts. So there's your strangle/risk reversal, listeners. 7-4 around the 6 strike in January in nat gas. 15,000 of the 4 puts going up this week. And unlike the 7 calls, these were all closing. So maybe some folks panicking a little bit, thinking we're getting the heck out of Dodge and taking these puts off, or they're taking advantage of the sell-off we've had and closing out those puts. Either way, a lot of closing paper throughout the week. 4,100, again, the big day. Actually, not take it back. Today is the big day. About 8,000 going up today. 4,100 on Monday. 3,000 on Tuesday and a few hundred on Wednesday. It's like closing throughout the week. Obviously, we don't know about today's paper, but there was about 11,000 contracts open coming into today. So a good chance today's paper could be closing too. And then right behind it, we have the 4 half puts, also pretty active. 14,400 of those. The big day for those also today. 6,300 of those going up today, followed by 3,800 on Monday, 3,000 on Tuesday, and about 1,200 on Wednesday. So active time in the puts, as well as the calls in the front month here in nat gas. Let's scroll a little bit farther down and see if we can see any other interesting and or aberrant paper. How about April 9 calls, listeners? How's that strike float your fancy? Think we can get back to a 9 handle? I'm sorry, these are the February 9 calls. That makes it even more interesting. The Feb 9 calls going up 8,000 times this week, 3,700 on Monday, 3,200 today, and about 1,000 on Wednesday. Back and forth opening to closing throughout the week. We also had some interesting action. Let's go a little bit farther out. 5 puts here in March doing 7,600 contracts. The big day for those, pretty much evenly split between yesterday and today, about 3,150 both days, and about 1,100 on Monday. So a little bit of back and forth paper on these 5 puts here in March as well. Also, our friend, whoever's doing this, it used to be the 3 put strip. Now it's the 2.5 put strip, active from April all the way through to pretty much the end of the year. So those are lighting it up again as well. And then a little bit farther out, not a lot of crazy paper beyond that put strip at the end of the year. So no crazy D's of 2024 paper out here. We could probably talk a lot more about energy here in the rest of the show. But Blue, I know you've been doing a lot of different research and a lot of different complexes. So which one catches your fancy? Which complex you want to talk about next?
Well, I guess we should go to the flip side of energy and talk a little bit about some of the metals. You picked the metal. Silver has been very active. Gold is
silver
interesting.
Silver has been lighting it up. So maybe to the metals we can go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everyone, welcome to the shiny stuff, the wonderful world of metals. Head into that drop down, the TWIFO report, pop out of energy, go all the way down. Second from the bottom is where you will find metals, listeners, and we'll go to precious. For today's action, I think we'll hang out in silver, even though Blue wants to talk gold as well. He certainly can. Silver number 5 on our light side movers and shakers this week, up 1.94%. Coming into showtime, 23 and about a quarter out there right now. So a nice couple of months out there for silver. Blue, what's lighting up your tape in the shiny stuff these days?
Well, what's going on is a lot having to do with interest rates. Silver is a precious metal to some extent. It does have some industrial uses, but it's trading a little higher because we're getting a little closer to where we think the Fed might, the markets think anyway, the Fed might peak out interest rates in January or February, and that gives these silver gold metals a little lift here. But we're still at pretty we've only come back a little bit, so we'll see where they go. But we're at getting close up to that $24 on the silver.
Blue, one of the most frequent complaints we've heard from our listeners, especially of this show this year, has been, shall we say, the underperformance of some of these flight to quality assets, in particular gold, and maybe to a lesser degree, a silver. What are your thoughts on that and the fact that until recently we haven't seen much out of the metals this year at all?
Yeah, I think there's a misunderstanding in particularly the precious metals as to whether they're inflation hedges or dollar hedges. And I really think this misunderstanding comes all the way back to the 1970s. In the decade of the 70s, we had a weak dollar the whole decade. I mean, really weak. But we also had a lot of inflation. But we had inflation in other countries, Italy, the UK, a lot of different countries all over the world had inflation in the 70s, but the U.S. had the weak currency. And I think silver and gold were more of a hedge against the dollar back in the 70s. And so this year, they've had to wait for a pause in the dollar. And we finally got that, in the last 3 or 4 weeks. And that's when it's given silver and to some extent gold a chance to go up a little bit because they don't have that headwind from the strong dollar. So, we'll see where it goes from here. But that's the big change that I see over the last month.
Right now, silver seems to be content to keep heading up week after week. I said 23 and about a quarter right now. Pretty much unched since Monday's session. So a lot of this rally came after our show last week. Like I said, it's up nearly 2% since the end of our show last week. Of course, you go back about a month, silver's up roughly 8%. It was in the teens about a month ago. So silver's had a nice little pop over here over the last month and change. Listeners, and that's reflected also in the paper. Silver is starting to do more paper. There was a time when it was 15, 20,000 contracts was a good week out there in silver. This week, almost 40,000 contracts on the tape already, 38,000 contracts in silver. So silver is starting to gain more attention, perhaps not quite as crazy as when everyone was convinced there was going to be a short squeeze in silver last year. But outside of that, it's a pretty active period. And of that paper, almost half, 45% going up in the Jan contract. We have about close to 20 days to go on this one, so we can hang our hat out there. What is the vol in silver right now? You might be wondering. It's about exactly a 30, up about a tenth of a point right now. So that's actually fairly frothy for metals vol, listeners. And certainly when you compare it to, let's say, equity vol, which is hanging out somewhere in the low 20s right now, it certainly looks comparatively juicy. In terms of the skew, metals like to hang out frequently in that bit of a call denominated skew. They see a premium to the calls and a bit of a discount to the puts. That's kind of what we see out there in the Jan silver right now. The puts were a little bit cheap last week. This week they have swung. They're 1.1% cheap last week. This week they are 1.6% bid. So they have kind of swung in the other direction, but not much. The calls last week, 4.1% bid. This week, 3.1% bid. So we're actually seeing a bit of a slight premium on both wings right now, but it's very mild. It's close to a flat skew, not a huge evolution out there. And in terms of action, what was the number one most active contract in silver this week? It was the Jan 21.5 puts. Remember, I said we're hanging out at about a 23.25 right now, listeners. A 21.5 puts doing 3,500 contracts this week. The big day was Monday. 2,000 of them going up on Monday. Pretty much all that closing. 1,100 on Tuesday, also closing, and then the rest kind of scattered for the latter half of the week. So a lot of closing paper in the first half of the week out here on the 21.5 puts. Interesting. And then also right behind it, we saw about 3,200 of the 23 calls. Big day for them was Tuesday, 1,400 on Tuesday, 1,000 on Monday, about 500 today, not much on Wednesday. And back and forth opening to closing here, opening on Monday, closing on Tuesday. So a little bit of back and forth action on the 23 calls versus straight up closing on the 21.5 puts. Not surprising the 23s would be back and forth. That is pretty much an at the money strike now, but still interesting. And not right behind it, we saw the 24 calls also in January. So a lot of very tight action here in the Jan silver. 3,000, about 3,100 of these as well this week. The big day on Monday. Actually, I take it back. The big day was Tuesday as well. So it looks like we might have had a 24, 23 call vertical going up on Tuesday about 1,450 times and closing on both. So maybe someone getting the heck out of a Dodge on a bit of a call vertical they had on. Also traded 1,000 of the 24 calls on Monday and 560 today. Looks like they were closing on Monday as well. So some folks getting the heck out of Dodge on the 24s, maybe thinking that's a bit of a bridge too far, or taking advantage of the pop we've had to take their money and get the heck out of Dodge. Either way, intriguing stuff. So a lot of action. 21.5 puts, 23 calls, and 24 calls. Since we're hanging out in silver, let's look a quick look as well, because people usually, when they come to metals, they usually look at the shiny stuff, which is gold. Gold hanging out right now, 1,802. So just north of the 1,800 level right now. 157,000 contracts on the tape for gold. So it gives you a little bit of a frame of reference of the volume differential between the two, listeners. Talking about 40,000 for silver versus close to 160,000 for gold. In terms of action, it was the February contract that did about a quarter of the paper. So the paper more spread out in gold here. The vol in gold, 1,460. That's the kind of metals vol we're used to, listeners. So not a huge vol week or vol product right now. The skew in the Feb contract, not much going on out there. 1.1% bid last week, 0.5% bid this week. The calls literally unched on the week, 2.9% bid last week, 2.9% bid this week. So we have slight bids in both directions for gold as well, which is somewhat interesting out there. And in terms of action, it looks like it was the 1,900 calls that were leading the dance out here in February, doing about, it's like almost 10,000 contracts, about 9,000 going up. The big dog was today, about 4,000 today, 2,300 on Monday, and 1,700 on Wednesday. It looks like back and forth opening to closing throughout the week. Also, and if it's gold, there's got to be something funky. Looks like this week it's the 2075 calls in March. They went up 7,000 times this week. 5,000 on Monday, 2,000 on Tuesday, and that's it for the week. It doesn't really look like there's any other legs against, at least not in any sort of ratios that make sense. So straight paper on the 2075 calls here in March. Usually when we see upside like that, we see funky flies and ratios and a lot of that going up. Looks like we have some here in the 21.5 calls in September of next year. They went up 5,000 times. Again, just by themselves, just 5,000 of the 21.5. So maybe this is the week where the gold bugs are coming out, Blue. A little bit of interesting upside. Anything catching your eye in the world of gold right now, Blue, before we roll on to another complex?
Well, it's really interesting about the volume you've got going on in the those options back, in March of next year. March 22nd is the Federal Open Market Committee meeting for that month, and it'll be the second meeting of 2023. But it is the meeting where the big debate is going to be: do we pause or do we keep going higher? And the activity you're seeing in those March gold calls, is saying that there's an awful lot of people that are doing that debate about exactly what happens at that meeting, because if they pause the interest rates, that's good for gold, and if they don't, it's bad for gold. So there's a buyer and a seller on every one of these contracts, and it's a really interesting debate, all centered around that March FOMC meeting, which we know is going to be critical.
Well, since you're talking about the Fed and its impact, that means we have to get to equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, pop out of that drop down for metals. We're going to go back up about three slots to equity indexes. Going to go to U.S. Index E-mini. And make our first stop in the Russell 2000. Let me set the table from a vol perspective before I get Blue's thoughts. I'm sure he has quite a few on what might be the most Fed-driven market I've ever seen. Crazy times out there. Let's set the table from a vol perspective first. RVX, so the VIX of the Russell 2000, a little bit shy of a 26, about a 25.90 right now. It's actually up about 1.4 points from where it was last show. VIX itself, about 22.40. So getting a little bit of juice back, about exactly 2 points higher than it was this time last week. VVIX, so the vol at about an 85. It's up about a little over 3 points on the week. Vol Q, so the at-the-money vol of the NASDAQ at about 27.5. That's up 2.25 points. That puts that VIX to RVX, so that large cap to small cap vol spread, right around 3.5 points. That's about 2/3 of a point tighter than it was this time last show. And the VIX to vol Q, so the S&P 500 to NASDAQ vol spread at about 5.1 points. That's about 0.2 wider, still hanging out at about close to the same range it was this time last week. Blue, I was only half joking there earlier when I said this is one of the most Fed-driven markets I've ever seen. But clearly, everything we're doing when it comes to equities is all about the Fed. Will they, won't they? What will they do next? I have to imagine, as an economist, sir, this year has been just an embarrassment of riches. You and I haven't talked in ages. I don't even know where to begin for all this fun. But what's been lighting up your tape in this insanely Fed-driven equity market, sir?
Well, there's a lot of things. You're exactly right. It's been a lot of fun this year to analyze the Fed. They keep providing us with interesting surprises. But, Jay Powell has started to get his message pretty consistent now about taking rates a little higher than the market has been thinking and keeping them there longer. He made that absolutely clear in his press conference on November 2nd after the last Fed meeting. And what did the market do? The market did the opposite. So it listened to the Fed guidance, but it didn't take it as investment advice. And what I mean by doing the opposite is since, late October, early November, we've really seen a much bigger inversion of the yield curve with the short-term rates much higher than the long-term yields, which, is a reliable, not necessarily accurate, but more, it's not that, historically it's done a pretty good job of predicting recessions 12 to 18 months down the road. So equities have to overcome that. And, we're off the lows of equities, which was back when bond yields were at their highest somewhere in mid-October. The 10-year was like 4.25%. and that's when we were down around 3,600 on the S&P. But we haven't come back all that much, and the bonds have come back a ton. So what that's telling me is that the equity markets really are now pricing in probably a little more than a soft landing. They're seeing some recession likelihood in 2023. Now that might be wrong, but that's my interpretation of the headwinds that the equities are getting from the Fed.
Let's see how those headwinds are translating to some volume out here in small caps. A decent week, about 20,000 contracts on the tape. It's about what we expect out here in all things rut these days. 1817, so small caps and gold hanging out at a very similar price level. Which would you rather have right now, listeners? The Russell 2000 or some gold in your back pocket? I'm curious. That might be a fun poll to put out to our audience. Maybe we'll consider that. Producers, make a note of that maybe for next week. Of course, we'll be at very different prices by then, and it won't be as fun. In terms of action of that 20,000 contracts, about 33, so pretty much exactly a third of the paper going up in this D's contract. It has about 8 days to go. That's actually a decent amount of time for an equity. Usually it's all 1 day. We were just on the Option Block show, listeners, looking at some S&P volume over there, and these new dailies are just changing the game completely. Pretty much of the top 40 positions, top 40 most active contracts trading today, 36 of them, I think, were 1 day, 0 day to expiration trades. So that trend has just exploded on the SPX side of the fence. Be interesting to see if all that translates over here into all things E-mini as well. But in terms of action right now on the old rut here, it's the 2010 calls going up. Actually, before we get there, in D's, let's break down the vol. What is the vol right now? With about 8 days to go out here in this D's contract, about a 32, close to it, 31.5, up about 7.5 points on the week. So pretty frothy, close to a little bit above what we're seeing out there in RVX. Remember, RVX is a rolling 30-day measure. It uses that VIX methodology. And if we go out about 30 days, we see the vol in Russell 2000 is at about a 25, which is pretty much exactly where RVX is. So intriguing stuff, a little bit more vol, a little bit closer to home, which is kind of interesting. In terms of skew, the puts last week, 3.1% bid. This week, 3.5% bid. And the calls, 5.8% cheap this week, 6.6% cheap. If you're new to equities, listeners, that's the shape of the skew we usually expect in an equity, but not anywhere near the degree. You usually see the puts much more expensive and the calls a little cheaper. So that's kind of a mild skew for the Russell 2000. In terms of action, looks like it was all 2010 calls this week. That was the big dog. Nearly 1,000 of those going up this week. Interesting. It was again, another vertical, the 2010-2030 vertical. Looks like paper was taking it off on Monday, going up nearly 1,000 times each, so a couple of thousand contracts total. So a good chunk of this 20,000 contracts going up in a 2010-2030 vertical. It has about 8 days to go. It had obviously almost 2 weeks to go when they took it off earlier in the week. Clearly they thought 2010, 2030, a little bit of a bridge too far. If they sold it, they wanted to get what little premium they had left in it and just close it off because it's just risk at that point. Either way, a lot of closing paper on this 2010, 2030. That's a interesting vertical. Would not have been my first choice for what I thought would be the top trading asset out here. Also, we saw, looks like in the Jan contract, it has about 45 days to go. We saw another vertical, a 2080, 2100 vertical, also closing. That was about 500 times, about 1,000 contracts total for that one as well. So it looks like tight verticals and taking them off. Bit of the order of the day out here in all things small caps out here. But let's keep on rolling. I know Blue has a lot of other research. He mentioned all things Fed. We do have the Ultra 30-year making our movers and shakers this week. So I think we can head out to the rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. Get into that drop down, pop out of equities, and go down 2 slots to interest rates. Hang out in U.S. rates. I was joking about the Ultra 30-year. Only does a couple hundred contracts. We're probably not going to hang out there, but there are many other choices. Before we get to that, as I mentioned with the equities, Blue, obviously the Fed is the story for equities. It's the story, obviously, for rates as well. You've been looking at a lot of the different impacts of their actions, talking about 2%. Is 2% rates kind of what we're looking at for a new floor, a new zero out there? Also, maybe some notions. A lot of people have been hitting on the Fed for their QE, saying that QE and keeping rates too low for too long really added a lot of fuel to this inflationary fire. So some interesting research out there, Blue, when it comes to rates in the Fed. Well, what have you been finding out there?
Well, let's go first to that 2%. This is a very long-term view, but, it's the 2% is the new zero. And what we mean by that is that once rates get to wherever they're going to go, and then eventually they start coming down because inflation comes down and maybe the economy is a little weak, how low does the Fed take rates? And we really don't think they're going to take them back to zero or like Greenspan did to 1% during that housing boom. And that's because zero rates, 1% rates is, it creates bubbles in asset prices. And then, the Fed has to have an exit plan. And it may be that putting rates only as low as 2% during economically challenging times gives the Fed a little more flexibility. It doesn't create the incentive to add search for risk, search for yield. And so, as we look back over the last 10 or 12 years, some of the lessons we're thinking we may learn is that, 1% is too low, even when the economy is weak. Because, people are hurt. Retirees are hurt. Money market funds can't really function properly. Zero has its costs. And, of course, it creates a search for yield, which creates too much risk. So that's one thing that's going on. The other thing is we do have quantitative tightening at the Fed now. They're letting their balance sheet shrink a little bit. They're not doing it too fast. But that also is something we've learned is that quantitative easing, when the Fed was buying, really contributed to asset price inflation, but it didn't do all that much for the real economy. And so I think, when the next time we have a crisis, the Fed's going to be a little bit different based on what it's learned this time around. But right now, the Fed's trying to figure out how high to raise rates to get this inflationary impulse under control. By the way, the inflation's coming down in part because of things the Fed has already done. Housing prices, mortgage rates have doubled. Housing prices are coming down. Even rents are starting to come down. So we're seeing an impact from what the Fed's already done, but we're also seeing an impact on inflation from the general idea is that the things that caused it, the pandemic shift to buying goods, well, that's over. We're flying around and going out to eat, and services are back. The fiscal policy stimulus is gone. That's not going to happen again. The Fed's not doing any quantitative easing anymore. So the things that caused the inflation are all been taken away. So I think if we have patience, we're going to see inflation come down pretty rapidly in the first half of next year. But that's, if that doesn't happen, the Fed will take rates higher. That's what they've told us, and I do believe them.
Let's see what they're giving us out here on the rates complex this week. We'll hang out in the 10-year, listeners. A little bit more paper than the Ultra 30, just a little bit. I said there's about a couple hundred contracts in the Ultra 30-year. How about almost 3 million in the 10-year out there? 2.97 million to be precise right now. So a wee bit more paper in the 10-year, hanging out about a 114.14 out there right now in the old 10-year, off slightly on the week, not a huge week from a mover and shaker perspective. Obviously a very active week from a volume perspective. In terms of action, about a third, 33%, or close to it, of that nearly 3 million contracts was going up in the Jan contract. It has about 15 days to go. That's some near dated paper for the 30-year. What is the vol out here, you might be wondering? It's a little bit shy of a 10, 9.5, but it's actually up 1.5 points this week. So that's a big pop in vol. This front portion of this 10-year curve is really getting a ton of vol. 3 points in that front contract going away tomorrow. Obviously, it's more gamma than vol, but still interesting. The contract that 6 days ago gained about 3 points this week. It's at 11.25 right now. And this contract's at about 9.5. So, wow, a lot of juice in that near portion. I'm not used to seeing much more than a 4 or 5 in the 10 years. That's interesting. In terms of action, last week, the puts 2% cheap. This week, flat. as you'd expect with such a low baseline for vol. And the calls, same thing, 1.1% bid last week. This week, 1.6% cheap out there for the calls. And then of the contracts, a lot of paper flying fast and furious this week. Looks like the big dog was out in March. It was the March 11 half puts, did a whopping 153,000 contracts. That's pretty much, if you took, that's all of gold right there. And obviously 4x what we saw out there in silver. So it's a lot of paper just in these 111 and a half puts. They traded a whopping 106,000 on Tuesday, all opening pretty much 34,000 on Wednesday, 7,500 on Monday, only 5,200 today. I do love how in the rates complex things can do a tsunami of paper one day and then just a little trickle the next. It always fascinates me out there. Right behind it, we also saw the 110 and a half puts going up 150,000 times. Again, the big day was Tuesday, 120,000 on Tuesday for these, 27,000 on Wednesday, 2,500 on Monday, only 1,400 today. So quiet day today for the 10-year, but obviously a rock'em sock'em week out there. We're kind of coming up against it, but we did have just a ton of ags on the light side this week, so we got to head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the ever-interesting, ever-evolving world of ags. Go all the way to the top of that drop-down in the TWIFO report. You'll see ags at the top of the list. Then hang out in grains and oil seeds. We can go anywhere from there. Obviously, blew a lot of ags lighting up our tape this week. I know you're not talking to me. You're busy doing your best weatherman impersonation, talking about El Niños and La Niñas. So what's catching your eye out there in the world of ags and weather-related products these days, sir?
Well, people eat and animals eat whether or not there's a recession or not. So one of the things that we're looking at in ags before I get to the weather is, how's China going to do its buying next year? And, they've been over the last 3 or 4 years, they bought more from Brazil, particularly in soybeans and a little in corn than they have from, shifting their purchases from North America. So, that trend may still continue. Which means, a little bit of a headwind for U.S. ags. But the weather side has been, like you mentioned, the La Nina is still around. It's weakening a little bit. But the other weather pattern is we really haven't had as much rain and water flowing in the Mississippi River. We've seen this in Europe with the Rhine. We've seen it in China with the Yangtze. But, in the Mississippi, that's the way you get your grains down to the ports of New Orleans and out to your export clients. And we had some lower water levels than usual over the last couple of months that's limited barge traffic. So as that problem eases away, as China starts to come back, as the weather gets a little more neutral, we can kind of understand that the ags can rally a little bit. And then there's the Ukraine. We hit most of our ag peaks, particularly wheat, back in February, March when the Ukraine-Russia war started. But, now we've come off of those. But you can really see that we're reaching some kind of more typical agricultural markets where we're really looking at the weather. We're looking at Chinese demand. And, it just feels a lot more like we've gone back to 2019 or than what we were doing in the early part of this year.
Well, you mentioned the beans. We have soybeans at number 4 on our light side movers, up 3.16%. Also, soybean meal up 8.3%. We just talked about soybean meal last week. So let's go out to the beans themselves right now in the time we have remaining. How much action right now in the soybeans? 157,000 contracts. So similar to what we saw out there in gold, also similar to those puts we saw in the 10-year. Where are the beans right now? 1486 and a half. For those of you who don't follow soybeans every day, listeners, up about 3 1/3 just from Monday's session, of course, and a little bit less than that if you go back to the end of the show last week. And of that, about 160,000 contracts, 41% going up in the Jan contract. Has about 15 days to go, so we'll hang out there for the rest of the show. Let's see. Vol-wise, what is vol in the beans? It's analogous to, at least on this contract, what we're seeing out there in some of the rates. Only about 14 3/4, down about 2 1/4. It actually looks like gold vol out there right now. Some of the other contracts are a little bit frothier, shall we say. We're seeing 26s actually a 38 out there in the July contract. So the vol is kind of all over the place here in soybeans on the term structure. But this particular contract, the Jan contract, which did a lot of paper this week, only about 14 3/4, off about 2 1/4 this week. Skew wise, the puts last week 9.2% bid. This week 1.4% bid. So the puts came in quite a bit. We had some big evolutions in the skew last week on the soybean meal, I believe, as well. And 1.1% cheap were the calls last week. This week 1% cheap. So no real evolution on the call side. And in terms of action, looks like it was the 1,500 calls leading the dance this week, listeners, doing 6,540 contracts. Looks like it's been trading pretty much all week long, which makes sense. We're pretty close to that strike. The 24, almost 2,500 going up today. So a good chunk today. 1,800 on Wednesday, about 1,000 on Tuesday, 1,400 on Monday. Back and forth, opening to closing all week long, which makes sense. It's pretty much an at-the-money strike. As 14 half puts are right behind it as well. These did about 6,200 contracts, the big day for those. 2,200 on Wednesday, 1,500 on Tuesday, 1,300 on Monday, and 1,100 today. Again, back and forth, opening to closing throughout the week, which also is not surprising. These are close to at-the-money puts as well. Let's see, a little bit beyond that. We also saw 1,400 puts going up about 5,000 times. The big day for those, 2,100 times on Monday. Most of that closing, the rest scattered throughout the week. But again, let's go a little bit farther out. 1,520 calls. These are in February, doing about 4,000 contracts. Almost all of that today. 3,400, the 1520s going up today. Interesting. Looks like also the 1480s are going up 1,130 times. So maybe a 1480, 1520. Very funky ratio spread, or just unrelated paper, but that's what we've got going up today. A pretty active day out there in the soybeans today, interestingly enough. And also 1,300 puts in March, also pretty active, going up 4,500 times. The big day actually today, again, today, a pretty active day, about 2,000 contracts going up today, 1,100 on Tuesday, about 800 on Monday, 700 on Wednesday. It's like opening slightly on Monday, closing throughout the rest of the week. A really quick scan. It looks like that's the highlights of the sizable paper out. That's also pretty much all she wrote here for TWIFO this week. All right, Mr. Blue, the show that's been 3+ years in the making, sir. It's finally popped off. We got to do it again more often than once every 3 years, sir. That's crazy. Crazy talk.
All right. No. Well, it's a good show.
Hopefully you had fun. Hopefully you'll come back on sometime before the next earth-shaking event happens that rocks the world. But in between now and then, Blue, if folks want to check out what you and the team over there at CME Research are up to, where should they go? What should they do, sir?
Well, they can find us on CME Group website under education, under research, or they can just Google me and ask for content and they'll get something. We do a lot of videos and we're doing a lot of research into options with the CVOL concepts and I'm looking at all kind of different analytics around uncertainty because boy, do we have uncertainty. And I'll tell you, when you look at volatility now, you have to think about, the day-to-day vol, but you also have to think about, what's the probability it could have a really huge move, like really quickly. And that's gone up. And so that raises the volatility that you see on these implied vols and contracts. So a lot of interesting research.
And before we go, Blue, if you got anything interesting up your sleeve that you or the teams are working on, maybe you want to give us a little bit of a hint, a little bit of a sneak peek. Go ahead, sir. The floor is yours.
Well, we as we analyze volatility using the CVOL concept that CME has, we're able to take a look at the volatility that's coming from puts and the volatility that's implied by calls. You can kind of think of it as the upside risk versus the downside risk. And some markets like oil, for instance, we're seeing some asymmetry develop. And where the upside volatility is higher than the downside. And what that's telling us from a risk management perspective is that people are really afraid of an up spike. And they're more worried about a down drift. And that's kind of what's happened in that market. We've been drifting down, but when it goes up, it pops. And so it's an interesting asymmetry in how you manage the risk of those positions. So that's where a lot of our research is concentrated right now in the options world.
Check it out for yourselves there, listeners. CMEgroup.com. You know where to go. Click on that Insights tab. You'll see all of that great research. You also see some education, some links to this fun show. Of course, if you go to CMEgroup.com/TWIFO, you'll also find links to those TWIFO reports, which are updating throughout the week. So you don't have to do them just when you're listening to this show. They're running all the time for you out there. And of course, you know where to go to learn more about all things small caps. FTSERussell.com. FTSERussell.com is the place for all the data on what's going on from a small cap vol and a trend. All sorts of fun perspectives out there. You can also check out all their latest information over there on Twitter at FTSE Russell. Again, all one word. Give them a follow. A lot of great data coming out there. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad world of volatility on Volatility Views. And then back again after that for all you pro folks with Options Oddities, breaking down the crazy week that was and indeed still is from an unusual activity perspective. And we're back again next week with our usual explosion of content all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.